everyone. We have a filing to talk about that was actually filed way back in April. This is a pretty big one. NSCC 2021-005, order approving on accelerated basis to increase National Securities Clearing Corporation's minimum required fund deposit. Let's go and take a look. So background real quick, NSCC 2021-005 was filed April 26, 2021. This was one of the first ones that was filed after Gensler took office as far as from the NSCC. And the purpose of it is to increase the National Securities Clearing Corporation's minimum required fund deposit. Now, this is an amendment that came out today. However, they are approving it on an accelerated basis. And I believe the implementation time frame is between now and 30 days, but it's on an accelerated basis, so 30 days is at a maximum. It was published for comment on May 14th, 2021, and then on June 14th, the Commission grants a longer period for comment, at which point on the 12th, they're approving the amendment and approving the overall filing on an accelerated basis, and it should show up on the Fed Register hopefully tomorrow. Now, the description of this one, NSCC provides central counterparty services, much like we see with the Fed Reserve, which they should not be doing. The NSCC should be in the Fed spot for these repos, but they're not. That's why we're doing the SFT service. The Federal Reserve should not be involved with counterparty services. So they provide clearing, settlement, risk management, and a guarantee of completion for virtually all broker-to-broker trades involving equity securities, corporate and municipal debt securities, and certain other securities. In its role as a CCP, a key tool NSCC uses to manage its credit exposures to members is determining and collecting an appropriate required fund deposit, or margin, from each member. This is the margin call filing. We all got it wrong. 002 was supplemental liquidity deposit. This is margin deposit. So a member required fund deposit serves as collateral to mitigate potential losses to NSCC associated with the liquidation of the member's portfolio, should that member default. The aggregate of all members' required fund deposits constitutes NSCC's clearing fund, which it would access among other instances should a defaulting member's own required fund be insufficient to satisfy those losses to NSCC caused by the liquidation of that member's portfolio. Now, NSCC has been conducting daily backtesting simulations to evaluate whether each member's required fund deposit is sufficient to cover NSCC's credit exposures to that member based on simulated liquidation of the member's portfolio. They're literally simulating liquidations of members' portfolios right now. Why would they be doing that? I don't know. Guess what they're increasing this fund to? Currently, they're required to deposit $10,000. NSCC proposes to increase each member's minimum required fund by 25 times that amount to $250,000. Now, basically, Supernote 14 here says that NSCC 2017-008 adopted the model risk management framework and stating that required fund deposit backtesting would be performed at least on a daily basis. So description real quick. Based on its regular reviews, NSCC states it has found that members with required fund deposits below $250,000 disproportionately experience repeat backtesting deficiencies because should the member's settlement activity abruptly increase, the additional exposure to NSCC would not be mitigated until the collection of the required fund deposit either intraday or the next business day. NSCC states it has also found that its current minimum margin requirement of $10,000 is disproportionately lower than the minimum margin requirements of other CCPs that clear similar securities products. NSCC regularly reviews backtesting results to assess the effectiveness of its margining requirements. As a part of its review, NSCC investigates the causes of any backtesting deficiencies, paying particular attention to repeat backtesting deficiencies that would result in the member's backtesting coverage to fall below the 99% confidence target to determine if there's an identifiable cause of repeat backtesting deficiencies. NSCC also evaluates whether multiple members may experience backtesting deficiencies for the same underlying reason. Supernote 22 says, for example, that the initial contribution for the OCC, or the Options Clearing Corporation, is $500,000, and for the FICC, it is $100,000. So for the NSCC to have a $10,000 requirement is very low. So in essence, As discussed in Section 2, backtesting deficiencies highlight when a member's margin is insufficient to cover NSCC's credit exposure to that member. If a defaulted member's margin is insufficient to satisfy losses caused by the closeout of that member's position, NSCC and its non-defaulting members may be subject to losses. As summarized in Section 2B above, the proposed increase would have provided NSCC with additional resources, which would have resulted in a decrease in backtesting deficiencies and thus in a reduction in credit exposure to its members under the proposal. Moreover, NSCC would continue to require that members pay an amount equal to the minimum required fund deposit amount in cash. That is huge. The Commission acknowledges that the impact of increased margin requirements will likely present higher costs to some members with lower operating margins, lower cash reserves, or higher costs of capital compared to other members, which may weaken those members' competitive positions relative to others. So what does this all mean? Well, to reiterate, looking at an implementation from 30 days from now on an accelerated basis, increasing the deposit requirement from $10,000 to $250,000, and if that is not met, it can be collected intraday or the following business day. NSCC is a central clearing counterparty. The Fed Reserve acts as this entity during the repo timeframe. NSCC has been backtesting members on a daily basis for member defaults. The collateral must be in cash, and some members may be fucked, as the Commission has pointed out. So this one was filed in April, back and forth on it, and we got an approval. 30 days from now, the minimum deposit increases by 25 times, jack to the teeth.